Oh, I'll tell you this. Dad's just doing. Dad's live here, right? So just careful. Testing 1, 2, 3. Can you guys hear me? Hello, hello, hello. Hello, hello. Testing 1, 2, 3. Can you guys hear me? Ashreed Bullah. How to know if a range or price London range is efficient or not? Yeah, good question. Let me just do something really quickly. How's the video quality in your end? There's a slight stream delay here. How's the video quality in your end? Give me a second. There's a slight stream delay. Alrighty then. Sound and vision are good. Okay, cool. Cool. Can you please talk about market maker models? Market maker models. I'm not a fan of market maker models. Hashreed, I don't really use market maker models. The only thing I can tell you about market maker models is that generally in a market maker sell model, there'd be one leg of distribution before going to target. In a market maker buy model, there would be two legs, right? Here, and then this would sell off and take the liquidity here. Screen gone black. Weird. Hold on. Screen gone black. Why? There. Is that better? Just tell me when it comes back, right? Should come back any second now. Visible now. Okay. Like I was saying, I'm not really a fan of market maker buy models or sell models. What I can tell you is that if you have, let's say you had some sort of consolidation here, reversal, in a market maker buy model, there'd be two legs of accumulation. So 1, 2, going to some target to the left. In a market maker sell model, there'd be one leg of distribution before we go down here, right? So in this case, you'd have accumulation, accumulation, and then we get to a point here. And then in a sell model, we'd have one phase of distribution. And then we go down and take the liquidity there. PV on wrong screen. Hold on 1 second. Shit. Hold on 1 second. Let me... Ah, I see why. I see why. Okay, hold on 1 second, guys. Sorry. Hold on. Yeah, wrong screen. Because I split my screen. Sorry, guys. Hold on. I split the screen, so now it's showing the wrong screen. Right, but why is it showing this screen now? Hold on. This should be coming to the right screen now. Shift there. Right, let's have a look here now. Is that better? Should be seeing the right screen now. Yeah, good now. Okay. Like I said, in the market maker buy model, there'd be two phases of accumulation until an objective has been met. And in a market maker sell model, there'd be one, and then we head lower to take whatever liquidity needs to be taken. All good now. Perfect. Cool. Cool. Green light. How do you know if a range price, say London range, is efficient or not? Okay, that's another good question. Let's have a look. Ranges. Here's your Asian range. Here's your London range, and then there's New York here. For a range to be efficient or efficiently traded, yeah, I just touched on it. For a range to be efficiently traded, you need buy side and sell side candle bodies inside that range. So if you look at the Asian range in particular here, we had all this one-sided sell side delivery. Then we had all of this buy side delivery here. So from this point where the sell side started, if we drew a line over there like that, right? Terrible line. Let me redraw that line. If we drew a line like that, right? Everything below this line here is efficient. When we started to move above this line, we are running on buy side only. Price needed to come back down. And now this entire range here is efficient, and this entire range here is efficient, making all of this efficient, right? buy side and sell side candle bodies. So all of that is efficient. So that's how you know if a range is efficient or not, depending on whether buy side was delivered or sell side was delivered. Now if you're talking London in particular, here's London starting off here. You can see here all one-sided delivery, right? So at some point everything below here inefficient. We had some candles here, efficient, everything from here to here inefficient, efficient, right? So at some point candle bodies need to come down and print inside this range here where there was buy side only, which makes the London range efficient again. Does that make sense? Questions. Can you go over what you look for before placing a trade? Yeah, so depending on the asset that I would be, is beautiful when you put it like that. Yeah, that's all that it needs to be. Look, go back and look at Jonathan Duncan, any range that's traded, right? Any range. If you have a range of price, right, you have a range of price here like this. We are always wary when the range starts and we are just printing one-sided delivery like this, right? Because it means that all of this is running on buy side. At some point we need to come back down here, print candle bodies, sell side or down candle bodies inside this range. It would then make all of this range efficiently traded. That's just the premise of it. Is there a dealing range in every swing? A dealing range in particular, there's ranges. What is a dealing range? What is a dealing range? A dealing range for me would be any time buy side is taken and then sell side, or sell side and then buy side. It would give us effectively a dealing range. So say we had price here, right, and then we went all the way down here and then we started to reverse, and once we started to reverse we did something like this, right? We'll pause it there. When we on the way down, the objective is somewhere here, right? That's the objective. Price is or wants to move from here down here. This is some high time frame point of interest, maybe a daily low, 4 hourly, some low down here, right? Liquidity needs to be taken, and we know that reversals seek liquidity pools, so you can't reasonably or logically expect price to reverse from anywhere in the middle of nowhere, right? So once an objective is met and it's all the way down here, we want to see them create a range, give us a Judas or a raid on that liquidity created there. So we raid sell side, we then raid buy side. Once we take sell side and then buy side in this particular instance, we have a dealing range. Here's your dealing range here. This dealing range, depending on how efficiently traded it is, you may have an order block that is formed all the way down there, right? You may have some fair value gaps created inside here. Let's call this a fair value gap here, right? That's a fair value gap inside there. So in an ideal world, we would look for retracements to equilibrium, or an order block, or a fair value gap inside here. Please, did you take any trade? Yeah, we'll talk about the trades I took just now. Right. So a dealing range, we take sell side here, we took buy side here. This gives us the dealing range. Once retracement comes in, we're looking for equilibrium, FEGs at equilibrium, order block FEGs inside this range, any point of interest or PD array that we can use to frame a setup. Once we have that, we want to see again internally a run of liquidity and then reversal. This is where your 2022 FEG model will come into place. You start creating FEGs on the way up, and those FEGs would be used to propel price higher to where? Buy side liquidity. If we've taken sell side here, we need to take buy side out here. You'd often see consolidation below a high time frame point of interest, and then we run it like that there. This is where your market maker models come into play again. Market maker sell model, market maker buy model. See that? Sell side of the curve, buy side of the curve. So dealing range is a pretty simple thing. And a dealing range, you're only looking for a dealing range if you expect reversals. Don't look for a dealing range and reversals to happen just anywhere, right? So in this particular case here, here's a dealing range right here on NAS, where we took the buy side liquidity above these highs here and liquidity to the left here, and then we took sell side liquidity here, so it gave us a dealing range like this, from this high to that low. There's 50% retracement, and there's price coming into your order blocks here. In fact, this entire series of candles are order blocks, consecutive series of up candles. So yeah, or maybe on a M1 you would have framed something different there. Jonathan Duncan, the inefficiency that was created at 3:15 on the 29th. Right, 3:15 on the 29th. 3:15 New York time. What's up, Shane? For options trading, we need speed. Where does speed enter the market? Yeah, we can talk about low time frame BTC, I suppose, just now. What confirmation do we need to look for when price is going to reverse? Yeah, your confirmation would be a run on liquidity. Obviously, the high time frame or a point of interest would have to be met, and then you want to see a change in the state of delivery. So up candles printing at the highs, we trade through the opening price or lows of that up candle. We trade through down candle lows here, always good. Any down candles printed here, we trade through its lows, and then the change in the state of delivery is confirmed, dealing range confirmed. You look for retracement. Your setup could be something like this, right? Stops above the high. I put Dexter's fibs on here, and then you could target either a low to the left there, any of these lows here, right? It's all up to you. That could have been a trade idea there. It's actually a trade that I took on Friday. 3:15 a.m. What confirmation do we look when prices reversal? Yeah, I think I answered that. Yeah, confirmation is always going to be a high time frame point of interest. You're not going to be looking for price to reverse from just anywhere, right? Like, I mean, price is doing its thing. It's seeking something, probably a daily. Your daily levels are always key. Like if you look at NAS here, where would price want to or try to seek in this case? Let's just switch this over here. Maybe we put on a different NAS 100 USD. Right, we get rid of all this. Right, Now, if reversals seek liquidity pools and retracements seek imbalances, then if your expectation is of price to head lower, then you're not expecting full-on reversal from that particular point of interest, right? It may just be around on the low. Retail logic is that this held as support previously, let's buy it up, but you know that price is showing willingness to go lower, so any retracements back into FEGs, you're going to be looking for imbalances, and the easiest way to frame those would be IOFED, institutional order flow entry drill, right there. Not at the consequent encroachment of the FEG, not at the extreme end of the FEG. You're looking for price to just enter that FEG. Now, if you had this in mind as IOFED, come back to low time frame now, right? Here you go. There's your low time frame, M5. There's the, let's get rid of the FEG. There's the line here, which is the IOFED entry drill, right? Which is the candle that closed through that line. It's this guy right here. I'm going to change this to red. It's that candle right there. So I'm interested in that candle in particular. The low of that candle is going to frame a change in the state of delivery for me. When we go through that low, price is going to move from market maker buy model to market maker sell model. So when the low of that price is breached, I'm looking for dealing ranges or the equilibrium of the swing there. More particularly, how I like to frame my trades is I take the candle that closed through liquidity, and once the CSD occurs, we take 50% of that candle, body to body, right? That puts you here. You can have your entry, let's get rid of that line, right there at 50%. Now, stop placement is very important, because your stop in this case is going to be all the way up here unless you can frame something on the M1. Here, as price retraces, you know that price gave you a change in the state of delivery, is showing a willingness to go lower. We've come into the daily FEG or imbalance, so price should seek to reverse. So CSD, dealing range, retracement, and then pushes lower, goes lower here, retraces again exactly to that 50% that you marked off, and then price starts to melt down. Now, once you get dealing ranges being created, and this is where speed should come into the market. Once we break the low of the dealing range, right there, you see that? Someone asked me about speed. So if you look at speed, when a dealing range is created, we break the low of the dealing range. There's speed. There's your imbalance inside here. That's where you're going to enter again. Also, IOFED, just the tip there, just the tip of that FEG, and then price melts down again. Which is better to frame daily bias? Daily bias, you use daily candles, right? We're going to use daily candles for daily bias. Very simply put, if order flow is bearish, right? Here, clearly order flow is bullish. Here, bearish. Here, bullish. Here, bearish, right? If I'm using daily order flow for my, so do you participate in retracements? Like, yeah, if the leg is, if the opportunity is good enough, why not? Why not? Right. So you're looking for price to ideally push through or close below daily levels, right? When we start to close below daily levels like here, right? That means price is showing you that it wants, when this candle closes, price is showing you that it wants to go lower. What's the next daily draw after that? You're always going to look to the left, not the right, because there's nothing printing on the right. You're going to look to the left. Your next level would be here. So that should be your next target. If we close below that, like you see here, your next level is going to be right here. There you go. Now, when you fail to close below that level, you can see here, intermediate highs, and then a intermediate lows and a long-term low here, and then we started to reverse. It means price is either seeking liquidity via imbalances above us to head lower, or it wants to reverse and go much higher. We don't know if this could maybe have been the actual draw. On a monthly, you'll always look to the left, so on a daily or monthly level you'd see that there's we have this here. And what I generally do is this imbalance here, if you look at it, on the way up, FEGs are supposed to contain price and send price higher. So there's your FEG inside here. When we came back into it, no closes below it, send price higher. Now we came into it and we closed below it. So this FEG here now should become what ICT calls an inverse FEG, right? Or inverted FEG. Technically, support should become resistance. You can see we haven't closed, we closed below it. We retested as resistance, and now technically we should be heading much lower until we can close above it, retest it, and then head for something higher, right? For now, order flow is bearish, and I'm looking for price to head lower. So using a daily, use your daily candles and look at where the willingness is. Is price reaching? Has it reached for a particular low? Yes. Okay. If it is the expectation that price is heading much lower, for some reason your bias maybe says you want price to head down here or down here, because all of this on the way up has been super inefficient here, right? All running on buy side. We want to change that and start to make all of this efficient. So then any retracements back into the significant levels, imbalances, should be for fading to head down lower, right? So we're using daily highs and lows as a guide. Right, you had it highlighted, which is better, okay. Question, FUB time, AMD please, can you explain how to integrate into current trading plan? What are the advantages of incorporating these FUB times? Thank you, sir. Yeah, I still use Synapse, ANN, of course. ANN is OP. It's been more correct than incorrect, right? You can go and test that. There's times where I've gone against it and I saw my ass. How to frame the expansion once the range breaks. So your expansion is always going to seek an order block, right? That's the four tenets of price anatomy of price action, is that consolidation seeks equilibrium, expansion seeks order block, retracement seeks imbalance, and reversal seeks liquidity pools. Now, if you are framing expansion out of a range, then you are going to be using, let's look at this, right? Any expansion out of a range, you are going to use Dexter Labs FUBs. I've told you this before, I've given this to you guys before, where you frame the whole idea is, if you have a range of price, say this high here, right here, let's darken that so you can see it there. We always want to see price should never expand from consolidation. We should never see a case where we just started running lower or expanding lower. Or ideally you want to see that Judas swing or the run on liquidity then the dealing range, retracement, and then the expansion. But if you see this happen, the Judas or the turtle soup right here, that's the one we're interested in. From the start of that delivery to the end, if we project that downward, we would be looking for ideally 2 to 2.5 standard deviations. So there's your draw here. See that? Perfect. Taps it right there. If you start to close below, then we look for 4 to 4.5 standard deviations. So framing expansions, I'm merely using Dexter fibs to frame those expansions. Yeah, I'll show you. You want to see the CSD model again? It's very simple. Here we go. Liquidity taken here. Candle that took the liquidity is that one. We're just gonna mark it off for now, draw it out in time. It's that candle, green candle. That's the body of it. What's 50% of that candle? Right there. Right? Ideally, we want to be entering price when price comes to there. In this case, it just missed us. But what we do know is that a change in the state of delivery occurs once we trade below that candle's low. For me, there, change in the state of delivery. There's your dealing range right here. See that? Dealing range, 50%. There's your order block right there. I'm going to make it orange and big. See? There's no speed until the order block is tapped. So until the order block is tapped, you shouldn't be seeing any speed. So price comes in, heads lower, comes back in, takes the liquidity internally here again. CSD here again, and then heads lower. Now, again, what did I tell you? Speed comes in when you break the dealing range low. There's it right here. See that? FEG created. You get a breakaway gap and price starts shooting lower. CSD model is OP. My trades on Friday, I shorted all the way up here. Had my own reasons and my group knows why I shorted up there. There was a particular H1 level that I needed tapped. You could, for you guys, you could call it here, right? Or even right here. Remember, when you are framing a draw on liquidity and price is seeking to go higher first to that draw, right? There should be no logical or reasonable expectation that price should just wick this particular high and then head down lower. Why? Because if you look at a candle that took liquidity, and this candle took candles to the left, it took these candles highs here, which means those candles don't house any liquidity because they've taken liquidity. So you need to frame something else above it. And generally what you would frame would be imbalances, right? So anything above here, you look for an imbalance. There's your first one right there. And you look for old highs there. That would be a logical frame. This would be a logical frame, right? Inside here, you can see that there's a BPR. You have a long wick down, price whipsawed back, and then you had candle bodies down, and you had price come back in here. So you had this, and then price moved, right? So efficiently traded price, you could take 50% of this if you wanted, right, from there to there, and that's another drawn liquidity. But logically, you shouldn't be expecting price to just move from somewhere here. Remember, if these guys that are longing all the way at the bottom here want to exit their positions, the most likely place that they would exit their positions would be any imbalance that is created on the way down. If this is all one-sided sell side delivery, that means sell side imbalance, buy side inefficiency. That means there are willing buyers inside these imbalances who didn't get a chance to participate. That means if these guys are longing here to here, they'd be able to sell inside this imbalance here because they are willing buyers to buy back these positions inside this imbalance. So you can't expect price to just come above this high because this high holds no liquidity, right? So imbalance or older highs, anything else you can frame to the left. Don't just look for some high to the left and expect price to just move from there because it's a high, right? This high means nothing. For the CSD model, do you use daily 1 hour M5 time set? M5 for the CSD. For me particularly, you could frame CSD on any time frame. It's up to you. Israel, I think we spoke about a balanced price range. A balanced price range is basically a price range that has been efficiently traded, right? Think about any price range. Like you could take candle body to candle body, right? Look at this now, right here. Would you consider this a balanced price range or an efficiently traded range? You had sell side, buy side, sell side, buy side, sell side, buy side, buy side, sell side, right? Can you see that? Whole lot of price action inside here, which makes all of this efficiently traded and balanced. That's a balanced price range. A price range that's not balanced, for example, would be if we took something like this all the way up here, right? If I did this, is this price range balanced, right? More particularly if I did something like this, right? Watch. There. Would you consider everything in the gray box to be balanced? Mostly buy side delivery. Okay, we've got sell side. So between here and here, we've got efficiently traded price. Below here, no. Above here, no. So that means price would need to come back down here and come back down here for it to be balanced. Right now it's an inefficient range or an inefficiently traded range. When does the CSD model fail? The CSD model fails when you have expectations. CSD occurs everywhere, anywhere and everywhere, right? Let's get rid of all of this now. For CSD to occur in the technical sense, and I always say this, that CSD is every time the low, right, no, sorry, let's rephrase that. Every time the open price of a down candle is traded through, and every time the open price of an up candle is traded through, that is CSD, a change in the state of delivery. The way we use it, we are only interested in the candle that closed in liquidity, TCM, Currency Merchant Teachings, OB model. A candle close in liquidity, we frame the CSD at the low of that candle. That's what I'm looking for. That's my personal filter that I've been taught and that I am showing you guys. CSD this is CSD. Trading through this is CSD. But CSD with no high time frame or no other points of interest to frame an idea around is pointless. CSDs often fail when you are playing against the trend. So if you are looking, I'll give you a perfect example here because let's get back to current price action. Right here. Let's look at this now, right? Let's see if I can get it right here. There we go. Right? Let's look at this piece of price action here, H1. We had all the makings of the good things. We had a consolidation or range that consolidated like that. We had liquidity taken right here. We had the high of that candle traded through. So technically you could call this CSD, or the CSD model can show up here, right? You would then take 50% of this candle right here, and you'd be looking for a trade setup like this. 50% here, do that, and come back to maybe the imbalance inside here, right? Looks good, looks like a good setup, but what's against you here? Order flow, clearly bearish. So you are looking to impose your will onto the market, and you want to trade against the market by taking a long, right? We don't know if there's any significant daily or high time frame liquidity that has been taken. I mean, if you just look to the left, we've taken, okay, here a failure swing here, but this is still intact, right? But you are trying to frame a reversal that's not in liquidity to send price higher. What happens next? Let's take a look. Whoops, you get stopped out. Now what the hell do you do? See what I mean? This is where CSDs fail. Doesn't fail because the model is not accurate or the model is not correct. It's how you frame the model. And at this particular point, I did tell my guys, watch the breakaway gap or the imbalances inside here. Watch those. This shouldn't be wanting to reach higher up here. This wants to go lower. We are closing there. We are closing below those lows. This is just retracements. This is where you make money. I shorted here. I shorted here. I shorted here. I played all of this move down. So you ask me where does CSD fail, and it's there. Look at this. We closed below here, we closed below here, and now we closed below here. Again, there's CSD here. So you would expect retracement here and price to push higher, right? Nope, not the case. Doesn't work like that. For me, what this is telling me is that if we are closing below here, here, and here, then price is telling me, hey, look, I want to go lower. But I think I want to head a bit higher and grab a bit more liquidity before I head lower. So if you are seeing the price is showing you the willingness to head lower, fair enough. Your job would be to look for a logical point where price could reverse to before continuing, right? And that logical point would come in at failure swings, rejection blocks. See that? Rejection block ideas, failure swings. Then you could frame internal liquidity being taken, change in the state of delivery, retracement, and then there's your expansion down there. A lot can be done if you know what you're looking for. Right. I'll show you a long that I took, right? And it may not make sense to you. It was right here. Now, most of you know, let's look at the short, right? Most of you know that, well, my guys know that I am more aggressive when it comes to CSD. In terms of, if I identify the CSD candle candidate, right? Here is the candle that's closing above or in liquidity here. I know that once we trade below this candle, I want to be short. So as soon as we wick through here, I'm short, knowing full well that this can happen, right? My stop's still going to be above here. This can go against me. I know that. I almost expect it. If it does come against me, I'll add. Why? Because we have a change in the state of delivery at a high time frame point of interest for me. I'm taking this. This just so happens that this was about 50% of this candle here, and then there's your move down. There's a retest of the broken level, breaker block vibes, move down. What should give you more confidence in something like this? When you look at the delivery, let's look at let's see, put this right. Let's look at the delivery here. Very one-sided sort of delivery on the day, right? If we go on M1, you can see that the delivery here was one-sided up here. So at some point they need to come and rebalance this. Is this particular range here efficient? No, there's a small portion inside here that's inefficient. If you look at it from here to here, there's even some inside here that's inefficient. So your look back is always going to be, where did we come from? Is it efficient or inefficient? Which part of it is inefficient? Where do we have to go to? CSD, for CSD to occur, it's wicks only for me. Right. So what else should you be wary of on, let's say, this particular day here, right? Here's the range. Let's do this. A range in price and time that the currency merchant has shown you guys there, right there. The opening price of that is there, and this is the range right here to 8.15. There you go. M5, price heads lower, pushes up, right? This is Friday. Bear in mind, Friday is TGIF. You should expect retracements, especially if price has been pushing higher since Wednesday or Tuesday. Price is pushing higher. Friday should want to retrace 20 to 30% of the weekly candle. So we have a range here. We have identified the high and the low. A candle that closed above the high right here. The low of that candle right there. So a change in the state of delivery occurred there. Your job would be to look for retracements, put your dealing range on. There you go. 50%, that's your short. What's your lowest hanging fruit? The low of this range. That should be your lowest hanging fruit. So your trade could look something like this. Not worried about the RR. you could have that. That's about 2R, right? But if you were nimble enough, you would have aimed for one of these down here. That puts it at almost 4R. You can't just take trades based on what you think. There always has to be something, a look back function or a look back range for you to frame an idea on. Whether it's low time frame, high time frame, whatever it is, you need something to reference in order to know what to do. AMD fib time. What is the Alistair? What is the AMD fib time, brother? The only AMD fib time I use is this one here. Let's have a look. AMD, right here, where you could fib this on a week. Right? This could be framed on a week. It could be framed on a session. Could be framed on a day. So if I frame this on a day, in terms of this is Hoppy's AMD, then we could do this, right? Come to a day, take this, push it one forward, come back to, let's say, M15, and then this would be your day in terms of the power of 3. Here you can see the first, this is accumulation, so that's accumulation. Here to here you expect manipulation, and in this here you expect distribution. But more particularly, your distribution should be about 50%. Let's see if we can get 50% of this. You should roughly expect your distribution phase to end. We'll show it to you now. 1 second. Let's do that. Right, somewhere there. Nope, let's do this. Somewhere here. In the middle of the distribution phase. Now, if you think about this and why time is fractal, if you treated, you guys see this as A, M, D, right? But I see this as a weekly profile where this is Friday's price action only, but I could treat this as Monday, Tuesday, Wednesday is the manipulation, Thursday, and Friday. That means if Monday and Tuesday are making a range, Wednesday or Thursday is going to take the high, and then Thursday is going to head lower into Friday. So if you look at what weekly profile is this in particular, it's a Thursday high of the week, and then melts down into Friday. Then TGIF retracement. $4 a.m. to 8:15 a.m. It's a pity that you can't watch any more of his videos. It was just a look back range that he gave to you guys because he doesn't consider anything after 4 p.m. New York time to 4 a.m. a real price action. What are the questions, children? What GAN box is that? AMB station, what GAN box is that? The AMD. could use these settings here. 0, 0.38, 0.62, and 1. That's it. 0.38, 0.62, 1. It's the same as using this for time zone. 0.2, 0.4, 0.6, 0.8, and 1. And then you get 5 cycles inside here. I just sent you an indicator invite for AMD. Can you show us on the weekly? Yeah, you can look at this on the weekly. I don't know how much that will help you on a weekly, but sure, let's take a look. Come back to an H4, for example. There you go. So I drew it on a weekly. I'm now on an H4. That means between this and this, you expect, right, an accumulation phase. Between here and here, you expect manipulation. You see that? And up to here, you expect distribution. See that? So if you're looking at it, it would be accumulation, manipulation, distribution. AMD. That's it on a weekly. You guys should play around with this. Play around with Trader Days quarterly theory as well. They're all very similar concepts. Days of the week, power of 3 AMD cycles, quarterly theory. It's all the same thing. Just worded, phrased differently. It's all the same thing. What else do you need to know? I haven't tackled BTC in a long time. It's been a while. It's not about, Alistair, it's not about who has more info. It's these things tend to open up pathways in your brain when you study them and look at them. Saifuddin, yeah, I've learned everything TCM or Kish has to teach. Pretty much everything. BTC monthly. Let's take a look here, right? Still stuck in the FEG here. Right here. Not showing any willingness to go lower. Price should, on a monthly level, want to take the liquidity out at this high here. So keep this in mind, 3250. I think once we get to 3250, that's a failure swing level right here. Rejection block inside here, you see it? It should want to head lower. If not, up inside here. This is a breakaway gap, so this can stay open. These wicks have tapped into it already. So not necessary to take the high on BTC. 3250, look at that. Sessions indicator. Yeah. Just message me on Telegram. So for now, 3250 on a monthly level. We should want to come out and take this high out here. $32.50 monthly high. Again, it does look like a dealing range, right? We took buy side here, we took sell side here. Here's your dealing range. Whatever it does inside here should be retracement. Look for the change in the state of delivery, and then we want to head lower like that. So now it's just playing around inside here. Maybe it comes, dips one back, does that, and then we head higher here. But ideally 32.50. Here's your order block up here. We'll look for BTC to come and play there. Take the liquidity generated. You see, when price does something like this, creates highs like this, it should want to come back and take those highs before heading lower. So BTC 32.50. I'll look at shorts after that. Other than that, I'm not too interested in BTC. Look at, let's see something here on NAS, right? H1 or H4. Let's call it H1, right? Here's a low right here. We'll make it darker. The candle that closed below the low is this guy. When this sped up through that high, it created a change in the state of delivery. We also broke this swing high here. That means retracements back in should be for buying, because this should be your expectation. Stops below here. What else do you see inside there? Is there not an FEG inside there? Right there. There you go. Is this not a dealing range inside here? What did I tell you happens above a dealing range high? Speed. There's your FEG above there, right here. As long as we stay inside this, this should want to send price higher. Staying inside this range right here. Right, if there's no more questions, then we'll call it a night on this. This should be available on YouTube. If you want to go back and reference anything, it should be available on YouTube. Right, yeah, so no problem. That's it. Why you took that two candle? Which two candles? AMV station, what two candles are you talking about before we go? I didn't take any two black candles. I didn't take two black candles at all. Oh, for changing the state of delivery? No, I didn't take. I said this is a low. This is a low. This is the candle that closed below that low. When we get back above that high, change in the state of delivery. That's what I said. No problem, AMV, no problem. You see, when you know what to look for, or you know what you're looking for, then things become easier, right? CSD, FEG, market structure shift, retracement, CSD, expansion. You could take the Dexter fibs, put it on this leg right here from the bottom to where it started, project it upward 2 to 2.5 standard deviations, and if it closes above 2.5, project it to 4 to 4.5. There you go. This is a trade on its own. 805. It's about almost 300 points there. Now I don't move CISD unless, okay, so let's look at something here, right? If this was my CISD candidate right there, let's get rid of this. Here's a low. Here's a candle that closed in liquidity. I'd frame CISD there, right? If we retrace and we head down lower and another candle closes there, I'm framing CSD there on this candle now, not this candle. Yeah. Right, that's it. Give it one more minute because there's a stream delay, and then I'm going to end it here. How low can it go? Stoned. How high are you? Stoned high. Not stoned at all, brother. I wish I was. Not into that stuff. Yeah, no problem. Telegram. You can message me on Telegram. Alex is into giant ball sacks and massive oiled leather sausages. Nice one, nice one. I don't think you need to go into the AMD rabbit hole. I don't think you need to go at all. It's good. It's good to go into it just to come out the other side and expand some neurons or pathways in your brain, but it's not going to give you some magical answer to trading or anything. I promise you it won't. You're only going to use it to open up those pathways. Haha. South Africa's winning. Nice. I'm on Telegram. I'm on Discord. Most places. I've stopped trading London session. I mean, you can. I used to trade London session a lot. Not saying you can't, but there's certain things you need to look for. I mean, you don't need you don't need many trades a day to be profitable, right? Like I'll show you my last long on NAS was this one. Approaching the end of the session, price came in here, we had CST inside here, and I entered here. We ran liquidity here. My stop was about 10 or 15 points below here. I just got saved there. But primarily my idea was this. Not only to take this, but to come up higher here and here. That was my last trade on that. Let me just see if I can find something here. Give me a sec. Paste. Yeah, this was it. You can see the 75.50 to 675.50 to 645. So yeah, on this feed it's 93. So from here I closed up here. So first position was added when we did this and this. That was my first position. Second position, the CSD here, right here. Back inside this box. Sorry, but that caught that whole thing up. This is Alpha Capital. I'm coming now. AMD seems to be a nice part of the puzzle confirmation for me. Kind of like measure twice but once concept. Yeah, possible. Alright kids, that's it. I really have to go now. 10:30 on my side. I will catch you guys on Telegram or Discord. You can message me anytime. Yeah, that's it. Thanks.